interesting. I see your report here. We're talking about the market, the elections going to impact the market direction going forward. But we're seeing the equities rally so far. What's happening here?
Okay, thank you very much for having me, Kenneth. I think in January we released a report which we titled Bumpy Roads Ahead, Policy Options and Strategies. And in that report we noted that it's possible that the election consideration may make some investors to deter them from taking position in the market. However, some savvy investors may want to take that opportunity to be strategic in taking position in the market. And that's exactly what we are seeing. So we're beginning to see, we saw a couple of...
FPIs are back.
Yes, foreign investors coming to the market to take position. And of course, the known names, Nestle, Seplat, Dansem, Dangote Cement, and those highly capitalized stocks are the ones that they took position in yesterday, and that was why the market rallied.
Okay, interesting. So the election fears for the markets is nothing to worry about now.
It's not really, for me, I don't think it's something to worry much about. It appears that the odd favors either the incumbents or the PDP candidates. And good enough, we have a fair idea of what they would do. Whether their policy is optimal, but then we have an idea of what they're going to do. And then the way things are, we have said it a number of times, that we don't think there will be crisis. It will be peaceful. There may be some issues here and there which will be resolved. Nigerian is very important to sub-Saharan African countries, West African country, and African. And therefore, we don't expect any problem. And therefore, we expect that the market will rally after that. But they are taking position ahead of time.
All right, interesting. We're seeing that this strong result is coming at a time where the GDP numbers are coming out. What do you make of the new numbers, the GDP numbers, and how you see it impacting the market going forward? Okay,
so the number is actually pretty much in line with our forecast. At FXTH Research, we released a forecast of 1.94 for full year and then 2.67 for Q3. But it's the numbers that were released were a little bit lower than that, 1.93 and 2.43 thereabout for full year. However, it's an improvement, a consistent recovery over what we're having after recession. But what we must note also is that it is still very low, lower than where we should be operating. When you compare that with our GDP number, with our population growth, we are growing approximately 3%. And so if we are going at below that, it means that the economy is not expanding to the level that it will be required to create jobs for youth. Unemployment at about 23%. We have over 21 million people who are without job. And I think we released a report about 2 weeks ago in FSH Research to talk about the high unemployment rate in Nigeria, sustainable and solutions. So we need to grow faster than this.
So you put some very interesting suggestions on how to curb that. I would like you to speak to maybe a few of them.
Okay, so one of the things that we need to do is, if you look at the number that we have, real estate is still in contraction. I mean, in economic depression. That's a labor-intensive sector of the Nigerian economy. But if government can put in structures, one of the things that we suggested in that report is the fact that government can even guarantee their workers in terms of providing mortgage loans for them to enable them have affordable houses, which will make them to create activities in that area. So you partner with the private sector, and then you guarantee these loans for them over 15 years, because if you want to go to a commercial banks, borrowing at 17% is not, we can't develop that sector with that. And that sector has multiplier effect on manufacturing, cement production, and can create jobs for both skilled and unskilled laborers. So that's very key.
But that's still going to take some time to get that on going.
But then we just have to start a process now. And then the issue of infrastructure, because manufacturing companies are not really building, I mean, a number of them are not, our products are not competitive even locally and internationally. Okay. So you need to have structures in place that will improve the infrastructure to enable them to do that. And that area we need to focus attention on is education. We need to provide, thankfully enough this week, I think this week or last week, the ASU suspended their 3-month strike. Now, if you fund that sector very well, it will provide jobs, and it will even equip the students, graduates, with the relevant skills that are required in this fourth revolution in terms of high city knowledge, and which we have very low adoption in Nigeria. So those are few suggestions, some of suggestions that we have in that report that government needs to pay attention to grow the
All
economy.
right, let's get back to the markets now. We also saw the rise in capital importation, which you mentioned in your report as well. And then I'd like to get your sense of what you think how the market will be impacted by activities in the global space.
Okay, a number of issues. I mean, in general, we released a report also this month where we talk about the events in the global market on Nigeria and the impact of them and how sustainable are they going to be. We think that because of key events, the sanctions on Venezuela, which we think is not sustainable, yes, caused oil price to go up. Number two, we also saw the progress made between U.S. and China in terms of the renegotiation of the trade issues between them, and then which caused oil price to go up. Then the FOMC, the fact that they changed the language in their statement to mean that maybe they will not increase rates in first half of the year. All of these made foreign investors to come to Nigeria looking for a higher yield, and you have fairly good yield on fixed income securities and again undervaluation of stock prices in Nigeria. And those are the things that made the foreign investors to come in Nigeria. In January, we had a whole lot of foreign portfolio investment coming to Nigeria, and that's what the impact of it that we are seeing now. And I think if we have a good election, a candidate emerges, there is no problem. I think they will come with appropriate policy on ground to grow the economy.